Hey guys, so if you've hung around our channel for a while, you know that we've spent some time talking about not solely relying on a traditional retirement account like an IRA to meet your retirement goals. If you're new to our channel, there's a few reasons for this. Number one, the inflexibility that can happen in a retirement account due to the required minimum distributions and the tax complications that can come along with that. There's also estate planning complications when you're looking at future generations. So, want to emphasize using what we call high cash value life, which is also known as a LIRP, life insurance retirement plan, as a component or possibly as an alternative to traditional retirement planning, depending on your goals. So this is so important that I asked one of our top experts, Denise Bavier, to share an actual example, one of her clients, who happens to be a 38-year-old male, and he wanted to do a high cash value infinite banking type strategy and a LIRP, so he wanted to use the retirement planning strategy as well in later years to do tax-free income and to add some flexibility to his retirement plan. So let's jump into Denise's example, and then after that I'm going to jump back in and share sort of a summary with you and give you a few action steps to take. Denise?
Hi everyone, this is Denise, Pro Client Guide for InsuranceandEstates.com. Today I want to show you how you can create what we call a LIRP, life insurance retirement plan, and take advantage of infinite banking concepts all in one dynamic policy. I recently had a client who was looking at both infinite banking and a LIRP, thinking that he needed two different policies. I designed a policy for him that would accomplish both the flexibility of building cash values for loan availability for his current lifestyle, all the while building up his retirement income plan. So let's just take a look at how that falls into place. I have a male, age 38, preferred plus rating with one of our top carriers. He's looking to fund his policy $25,000 a year. He wants to be able to have the luxury of borrowing from himself when he needs the money, whether it's for investments or real estate. And he also wants to secure a tax-free retirement income for later years. So we're using a high cash value whole life policy to accomplish both of his goals simultaneously. He's going to fund the $25,000 annually, all the way to age 68. In year 5, let's just say he wants to take an $80,000 loan. He can take that loan and have it out as long as he wants, as long as his goal is to pay it back before he wants to start taking retirement income. But he decided he's going to pay it back in year 8. So he pays back the loan, and then that money is still available to loan again. He could even have loaned more in between that time. So there is still the flexibility of using this policy the way that he wanted to use it, to be able to have that availability of those funds. So he's going through his years and he just keeps funding it, and he's feeling really good about having all of that cash value. And then he comes to age 68. And that is when he decided he wants to start taking retirement income. At age 68, he will have $172,046 of retirement income, all the way to age 85. Now we can run this to go to age 90, however you want. He said, I think, 68 to 85 would be the perfect range that he would want to take income from. What we did at age 68 is we did what we call a reduced paid up. And basically we're just telling the insurance company, we no longer want any more premiums due on this policy. And they said, that's fine. We're going to shut those premiums off. We're going to reduce your death benefit of $25,83970 down to $23,17,083, $2,317,000. Once you have the policy for this amount of time, that reduced paid up amount is not very drastic. So they reduced it a couple of $100,000. Now no more premiums are due. He's just going to take income. He has no intention of paying this back, which is absolutely fine. This is going to him tax-free as a loan. And again, he can take whatever he wants. This is not set in stone. If he only wants to take $80,000 that year, fine, he can do that. But he can take up to $172,000 all the way to age 85. At the age of 85, when he stops taking income, he still has a death benefit of $986,000, which will continue to increase even though he's not putting any more money in the policy, just because of the dividends and cash value that are still accruing on the entire cash value. So even though he was taking loans, the money that he was using for whatever he needed was still earning interest and dividends, and that's the glory of infinite banking. So as you see, we've taken both infinite banking concepts and what we call a LIRP and created one policy that will work for both goals. I hope you enjoyed this webinar, and I'll talk to you soon.
Well, thanks, Denise. So what you guys just heard with Denise's client was he was a 38-year-old male in good health. He did $25,000 in premiums over a 30-year period. He started taking tax-free retirement income at age 68. He also may have picked up that he did a policy loan early on for some other goals, which is more of an infinite banking goal. And then he paid back that policy loan in year 8. Another part of his plan was he did what we call a reduced paid up at age 68, where he actually consolidated and reduced the death benefit a little bit, and that allowed for no more premiums to be required in the policy as he was taking income. A lot of different things. One thing he could have done is he could have done actual withdrawals too, up to basis. In this case, Denise just talked about the fact that they just did a policy loan from $1, but there's different ways to do that for tax advantages. All right, so if you're at the point where you're thinking about this, you want to see how it would work for you, wherever you're watching, there's a calendar link for Denise. You can click on that and schedule a one-to-one with her directly to see how this can work. The other thing we want to invite you to do is leave a comment. Any questions you have, leave a comment. We want to hear what you have to say and what you think about this topic, and we will respond to comments. Also invite you to like and subscribe, and thank you for watching. We'll see you in the next one.